Welcome back to Explain the Charts. Today, September 4th, we're taking a deep dive into USDJPY, analyzing the news and charting data to understand where this pair might be heading. Looking at the recent news, we see a lot of focus on the Japanese yen's strength, driven by speculation about the Bank of Japan possibly shifting away from its ultra-loose monetary policy stance, which could involve ending its years-long negative interest rate policy. There's also a lot of chatter about the Federal Reserve potentially lowering interest rates in the upcoming meeting, which could be another contributing factor to the yen's recent rally. The U.S. JOLTS data for July, which came in softer than expected, also fueled speculation about the Fed's rate cut, further weighing on the U.S. dollar against the yen. Now, let's turn our attention to the charts and see what the technicals are telling us. First, we'll look at the daily chart, spanning the past year and a half. We can observe a clear downtrend in the USDJPY pair since the beginning of the year, with the price breaking below key support levels, suggesting a weakening of the US dollar against the Japanese yen. We see the pair making a run towards the 144.00 level, breaking below it and continuing to push lower, potentially testing the August lows of 141.678. The daily chart is telling us that the yen is currently in a strong position and could continue to gain strength. Now, let's zoom in and take a look at the 1-hour chart to get a better sense of the recent price action. We can see a clear downtrend over the past few weeks on the 1-hour chart as well, with the price dropping below several key support levels. There's been a lot of volatility and choppiness in the recent trading sessions, but the overall direction seems to be downwards, reinforcing the bearish sentiment seen on the daily chart. Let's further pinpoint our analysis by taking a look at the 15-minute chart, which will give us a more detailed look at the current price fluctuations. On the 15-minute chart, we can see some potential signs of a reversal, with the yen's rally pushing the price back towards the 146.00 level. While the 1-hour and daily charts are showing bearish trends, this reversal on the 15-minute chart is something to watch out for, as it could potentially signal a shift in the overall sentiment. Let's take a closer look at a specific range of candles on the 15-minute chart to see if we can pinpoint any important price levels or patterns. If we narrow our focus to the candles starting around 8 p.m. on September 2nd, we can see the yen's rally pushing the price upwards, breaking above the 146.00 level, which acted as resistance earlier. This breakout above 146.00 could be a significant development, indicating a potential shift in the short-term trend. However, it's important to note that the daily and 1-hour charts are still showing bearish trends, so this reversal on the 15-minute chart could be a short-term blip or a false breakout. We need to monitor the price action closely in the coming hours and days to see if this reversal on the 15-minute chart translates into a larger shift in the trend. Let's recap the important price levels we've identified. The 146.00 level seems to be acting as a potential support zone for the yen's recent rally. The 144.00 level was a key support level that was broken, suggesting weakness in the US dollar. The August lows of 141.678 could be a potential target for the yen if the bearish trend continues. It's important to remember that this is a volatile market and the price action can change quickly. We need to pay close attention to the news flow, especially any announcements from the Bank of Japan and the Federal Reserve, which could significantly impact the USDJPY pair. We also need to keep an eye on the overall market sentiment, which can influence the yen's safe haven appeal and, consequently, the USDJPY pair. In the short term, the yen's rally and the potential breakout above 146.00 are worth watching, but the long-term trend still favors the yen. It will be crucial to observe how the price action evolves in the coming days and weeks to determine if this reversal on the 15-minute chart is a temporary blip or a sign of a larger trend change. Thanks for joining us on Explain the Charts. Stay tuned for more in-depth analysis of the markets.